Hey guys, Nate Short here, and welcome to my March 2020 short report, where I'm going to go over what's happening here in our local real estate market. And I'm going to talk about two things. First, of course, is what's on everyone's mind, the coronavirus, and what effect it's having on our current market. And the second thing I'm going to talk about is the stats that we just got on Friday that recap the entire month of February. Now, if you want a copy of these stats, just click on the link below, put in your name and email, and then we will send those to you by email directly to your inbox. And if you do request these reports and they don't go directly into your email, please be sure and check your junk mail, as sometimes we see these emails get hung up in people's junk folders. Okay, so what's the effect been so far with the coronavirus on the real estate market? Well, honestly, it's probably too early to tell, but the two things that I look at are open house activity, which has remained very strong the past few weekends. And then I also look at the new listings to pending sales ratio report that we get on a daily basis through the MLS. And again, we have seen no change in the market to this point. In fact, over the last 7 days, we had 177 new listings come on the market, and we actually had 224 homes go pending or into a pending status. So if anything, we've seen an increase in the activity. I think mainly fueled by the interest rates, which this week hit an all-time low, and then particularly with this massive economic expansion that we're having, we're also seeing that fuel the market. If you just drive around town, Amazon, Google, Microsoft, and these other tech companies are continuing to expand, and we have not seen or heard of any announcements that are going to change that trajectory. So to recap, thus far we have not seen a change in the market due to the coronavirus. So you're probably wondering, well, Nate, if there isn't much of a change, what are the stats actually telling us? Well, like I said, we just got the February numbers on Friday, and here they are. Our housing supply hit another record low this month with just 0.7 months supply, which means that if we had no other homes come on the market, it would take just 21 days to sell them all. And that is exactly the same inventory that we had back in 2017 and 2018. Interestingly, in those 2 years, prices were up 14% and 17% respectively. Now, just to give you some context, last year we had 1.8 months supply, so we're actually down 60% from last year. Now, as of the end of February, we only had 666 listings, whereas last year we had 1,294. Our pending sales are actually up 27%, and our closed sales are up just 3%. Now, what about prices, which is what most people care about? Well, the median closed sales price actually jumped from $768,000 to $829,000 this year, representing an 8% increase. Again, fueled by our strong economy and record low interest rates, which are down over 0.5% from last year and over 1% from 2018. This past week, interest rates hit an unbelievable 3.29% for a 30-year fixed rate. So even with the price gains that we saw, it's slightly less expensive to buy today than it was last year from a monthly payment standpoint. So here are a few more interesting stats. 34% of our sales were over list price or went over list price, and the median paid over list price was 5%, which is the highest premium that we've had in 19 months since 2017. 51% of the homes sold at or above list price versus 37% a month ago. And in specific areas, inventory is even tighter than the 0.7 months average. For example, North Seattle is at 0.5 month supply. Mill Creek is at 0.4 month supply. Can you believe that? Which are the two tightest submarkets that we have. While West Bellevue, which I sell a lot in, has gone from 2.7 month supply last year to 1.1 month supply this year. And Mercer Island has gone from 2.9 month supply last year to 0.9 month supply this year. And obviously every area has its own unique situation, which of course we have a great handle on my team here, because we are helping buyers and sellers in many of these different areas. So if we just look at February as a whole, things really couldn't be stronger. So here are a few key takeaways, I think. One, tight inventory means that it's challenging for buyers, which means if you're in the market, you really need someone with the experience to help you craft offers that will win in multiple offer situations. I've included a checklist with our report if you do get that sent to you, in case you are interested to know the types of things that we're looking at when we do craft these multiple offer deals. Now, if you're a seller pricing and prepping your home, well, it can be difficult, to determine what the right price and how to prep the house and how to get it on the market. And these are areas that my team and I add a tremendous amount of value, saving or making our clients tens of thousands, if not hundreds of thousands of dollars in many cases. So guys, I hope you've enjoyed this month's short report. It's obviously an incredible day out today, one of the few we've had this year. I look forward to keeping you up to date on the market as we move through this unfamiliar time. So thanks for listening, and we'll see you next month.